Alright, good afternoon. Thanks for tuning in here. This is Blue Chip Trader. I am going to discuss a quick look at the markets, and I'm going to go and take about a 10-minute look at the Liquid Momentum Focus List, which is a list of our top 50 ranked leading stocks in the market based upon volatility, relative strength, and liquidity. Starting off with the markets right now, I have not been active today based upon just the general price action. You know, you take a look at this daily SPY chart, and you can see here to kick off the month of July, we've actually had some pretty decent strength with a series of higher highs and higher lows, and the market looked like it was getting just a little bit short-term overbought as of yesterday. But price action coming right back into those June highs. If you recall, multiple times we kind of highlighted the June highs were coming into play. You also had that gap resistance going on from June 15th, right around that 278 area. So even though the gap was closed, it still had this significant resistance level where prior resistance took hold. So I wasn't really keen on buying anything yesterday into that move. I was more focusing on taking partial profits on any existing swings that I had picked up on the prior week. And I did actually add to a TQQQ short, which is a weighted NASDAQ ETF. But just for simplicity's sake, I'll just go to the QQQ charts. And it's pretty much the same type of pattern here. You can see there was resistance up there in the QQQs, and the NASDAQ was getting up to that level. So yesterday in the TQQQ, it seemed like it was a good place to kind of reload on our short hedge from June, where we had gotten short around here on the 21st and 22nd around that $63, $62 area, to add back to the short based upon the short-term move that we had, looking like a short-term overbought condition. Also, another reason why I think the market tipped its hand yesterday about the weakness that we were going to see today, and Jim and I mentioned this early yesterday afternoon and in the morning, was small caps and mid caps were showing relative weakness. They were both breaking below Monday's lows yesterday morning, and they were kind of looking like they were going to roll over significantly more as we saw internals weaken. By the afternoon yesterday, we had the advanced decline line and the up-down volume ratios moving into negative territory. So it kind of all hinted at the fact that the market was getting a little bit more defensive in posture. We had utility stocks bouncing. We had a little bit of gold and staples holding up pretty well. But the larger cap peers kind of just went sideways. Fast forward to today, and we see the markets kind of breaking down, gapping lower, trapping anybody who came a little late to the party buying yesterday into the strength. And then that pressure kind of has been sitting on the markets throughout the session today. Currently the Dow is down approximately 195 points. The S&P index is down 17 points. The mid caps are down $2.75. Small caps IWM is down $1, and NASDAQ is down 35 points. Advanced decline line, again, we use the cumulative advanced decline line on the exchanges here of the New York Stock Exchange and the NASDAQ exchange, and you can see on this 60-minute time frame here, again, the market was kind of tipping its hand a little bit here the last 2 or 3 sessions. A little bit of weakness coming off a really strong move reading on Friday, and then kind of slumping lower here. Looks like it's trying to stabilize a little bit down here, which could be considered to be oversold levels. But again, not really seeing any sort of aggressive upside buying pressure going on in the advanced decline line as of now. So if you're buying, you're possibly a little bit too early. Maybe it's a sign of stabilization going into tomorrow. The up-down volume ratio on the exchanges, you can see that this has been pretty much in distribution mode today. Pretty negative activity going off that neutral zone from earlier this morning, and seeing a little bit more distribution than we're used to as of late. So overall, that's kind of kept me on the sidelines. Now that doesn't mean that there's not opportunities anywhere. It's just that when I trade, I like things to line up. I like to see, support holding up. I like to see strength in the internals. I like to see buyers breaking things out above opening ranges and first hour ranges. And when I'm shorting, it's the exact opposite. I want to see my internals weak. I want to see the market under pressure, and I want to see a lot of selling going on. To me right now, things are just kind of a mixed bag, and I think everyone's just sitting around waiting for these earnings reports to come out from those 4 banks on Friday: J.P. Morgan, Citibank, PNC, and Wells Fargo. We do have Delta Airlines coming out on Thursday, so that might be a little bit of a movement going on there, maybe for the transportation sector. But overall, I think everyone's just kind of sitting on their hands and just kind of waiting to see how these upcoming earnings season plays out here. And that's just kind of, kept me, favoring a summer doldrum attitude here, just kind of taking more of a relaxed approach and not trying to avoid over trading and making too many silly mistakes with money management, forcing trades that just aren't really there. So with that said, I'm just going to quickly run through the liquid momentum focus list. And for those of you who are not familiar where to find that, that's going to be underneath your investing and trading drop down, and it's right there smack in the middle, right below the word technical analysis. It says liquid momentum. The ticker that we usually post under here is LQDXX, and this is a proprietary focus list of the top 50 ranked leaders in the market based upon liquidity, momentum, and volatility. And we created this about, let's say about 9 or 10 years ago, just so we can have this is basically, it fit right into my wheelhouse. It's really kind of the names that I like to trade. And if you scroll through the list real quick, you're going to notice that a lot of these names you should be very familiar with. They're usually not these obscure, smaller mid-cap names. They're definitely larger cap names that you probably have heard of before somewhere along the ways there. And obviously you can go through look at the top ranked ones. We got Amazon, Facebook, Netflix, Microsoft, Twitter, Visa, Salesforce, CRM, Fox, Adobe, Square, PayPal, MasterCard, IQ. Now this one is a kind of a new one. This was this recent Chinese IPO, but it's been showing really strong relative strength and actually qualified to make our list based upon the parameters that we scan for. Biogen, Nike, Texas Instruments. We have Spotify was interesting. This was a recent addition. You can look every week. This is updated. We usually have about 10 names that fall off and 10 names that get added on an average basis. But Spotify, you can see up here, was a new one that got added to the list. This is a recent IPO. ROKU was another one that just made the list as well based on its recent relative strength. Let's see. Align has been on here forever. They make those the invisible line braces, I believe. Darko Petroleum has been really strong. That's been a name that I've been swing trading lately. It's been one of my go-to names when I see the energy stocks acting well. Devon Energy has also been doing pretty well. You got Kohl's Department Store, VMware, ANDV is an interesting name because I believe that was a takeover candidate, and it has pulled a little bit in off its highs. So that's another interesting to pay attention to. PANW is another one I've been involved in recently. Let's see, and then that's as you get towards the bottoms, you're probably not too familiar with some of these names. Maybe you are, depending on how much research you have. But there's a couple key takeaways here that I want to just describe to people the way I approach this. So first off, I like to look at the industry. Usually there's a clumping. When you see the top leadership performance names here, I like to see, usually they're all clumped in like the same 3 or 4 major industries. And so even if you're not liking these particular names that are showing up here, you should at least be focused on the industry themselves. Now, there's so many ETFs out there these days that you can easily go out and just do a quick internet search for an ETF that probably represents one of these sectors, and you can go after that and you can approach the market in that regard. But just looking through here real quick, I see a lot of internet software popping up, whether it's a specific package software or internet related or retail related, but I definitely see internet software. Oil and gas is jumping out, electronics is jumping out, technology, a few biotechs, technology again, financial publishing, and some healthcare names. Now I know that sounds kind of vague, but again, these are the leading names in the market. So this is like almost my go-to focus list whenever I'm looking for trading opportunities. So again, this is usually updated over the weekend, either late on a Friday afternoon or early on a Monday morning. And then, typically what I'll do is I'll scroll through the list and I'll also show a few names that I find intriguing. And this is completely discretionary on my part. I'll go through each one of these 50 names and I'll just draw some real basic trend lines that I feel like can act as key inflection points going forward. They're not buy or sell recommendations, but they're levels on the charts that I'm looking at and that I will set alerts for on my other trading software, and when they come into play, those are going to be potential trades that I'm going to be looking at for our trading service, usually on a swing trading basis, because that is my bread and butter. But again, these are just kind of to show you how simple, and the way that I like to approach the market is definitely a keep it simple, stupid approach. And this is basically how I go about my own analysis and come up with my ideas for our site. So I'm going to move this aside real quick, and I'm just going to go through just a few names here on the charts so we can all follow along here. The first one is Spotify. So this was mentioned on our site just a little while ago in the early afternoon, and again, one thing that stood out. So it's definitely a leader on our focus list. Like I said, it got added this week. It was a recent IPO. They do the online music thing. And just looking at the chart here, it's got some decent relative strength the last couple of weeks. But ideally, it's pretty much right up against that June high there. Now, does that mean it's an automatic buy and a breakout? No, you can't approach the market that way. Again, everything has to be taken in context. You look at today's price action, things are pretty weak. We're already pulling back off like a 5 or 6 day rally in the market. You look at the advanced decline line and the up-down volume ratio, and I've already highlighted that those internals are somewhat weak and leaning to more of a distribution type of session. So you don't really want to be buying something that's going right up against resistance, trying to play that breakout when the broader market isn't really supporting that type of setup. Now, there are rare cases where it does work out, but for me, again, I like things to line up, and if in this case they're not lining up. Now, I know some people take a more aggressive approach, and when they see the broader market slipping and the internals slipping, they see a stock like this and they say it's up against resistance, let's take it as a short. And that's fine too, if that's the way you view the market. For me, knowing that this is a leading name and a name that's acting really strong, not just on a daily basis today, but also on a multi-week basis, and it fits the bill of all those parameters, I tend to avoid those type of contrarian trades. I don't like to short the strongest names in the market unless I have a reason to do so, unless I actually see the entire market in more of a corrective bear phase, and then these leaders are giving up trendline support and moving average support. I don't really necessarily like to fade strong stocks just because they're up against resistance in the first down day of a market, So, but nonetheless, what I do like to do is I do like to make note of these relative strength names. So something like Spotify, it's definitely a name that's going to be on my radar here. So when the market actually does turn around, and show some strength one of these days, this will be a name that's on my radar to play a potential breakout and move higher above that 183, 184 vicinity. So just keep that one out there. Another one that I thought was pretty interesting was VMware. That's VMW. And anybody that's been following the service for a while, you know that I'm a pretty big fan of gap support and gap resistance, particularly when it lines up with moving averages and other areas of support and resistance. So if you take a look at VMware, you can see that these June highs lined up right there around that 153 vicinity. That kind of was where the gap was to kick off July. And then the momentum kind of faded out, and we've seen a little bit of a pullback here. But now we have the 10-day and the 20-day moving averages on the rise to meet this gap support level right around this 152, 153 area. So this to me is a potential swing trade. I don't have any position in it yet, but it's on my radar. I'm looking for some sort of confirmation of the support level holding and then prices lifting back up, and hopefully the market at that time will also be supporting the move, and it would look like a little bit of a nice swing entry point with a defined risk right underneath this gap support area. So it's just one of those names that I think has to be kept on the radar. Netflix, this is a really interesting name too. I am swing long this. I've actually been swing long this for a couple weeks now, but I also recently added last week on this price action going on after the 4th of July. Just underneath that $400 level. It was pretty good relative strength that was going on that day. Then we saw that breakout occur on last Friday on the 6th. Took some profits into the gap up as it came back up to these June highs. And right now, again, this is showing pretty good relative strength given the fact that the majority of the market is down today, internals are weakening, and we have Netflix holding up, holding its own ground above Monday's gap around that 411 area. So this should be one that should be on the radar, potentially taking out this 423 high from June if price action can start moving to back above that 420 area. So that's another name that's that I like going on there. IQ, this is an interesting one. IQ was this recent Chinese IPO that came out in the spring. It had an absolutely stellar move late May and into early June that I think about at least two or three of us were trading it during this strong uptrend. Whether it was a scalp day trade or a swing trading basis. I know we had multiple trades during this strong momentum uptrend. And this one, Billy and Huya were the three Chinese IPOs that were really kind of providing a lot of gains going on there in early June. But here we are a few weeks later, and obviously it's lost a lot of its sizzle, but it's not really correcting aggressively, and it's very interesting price action going on here. Just a nice little bit of a consolidation pattern. If you look here at the weekly chart, again, I have different time frames down here. On the left is a monthly, on the center is a weekly, and on the right is a 60-minute time frame. And I've stated this before, I like to look at multiple time frames to get a better sense of who's in control, whether it's sellers or buyers. And right now, I'm hoping actually that this stock kind of just consolidates the rest of the next few days with an inside week on this chart down here in the center of the page. An inside week to me is a nice little consolidation pattern. It's a 5-day consolidation pattern, especially if it's really narrow in range. This might even be like a type of doji setup, which could potentially lead to a resumption of the uptrend. You take a look at this monthly time frame, and you got 3 months up, a pause. It'd be really nice just to have the price action break out again and finish with a strong July back into higher ground. So that's definitely one that's on my radar as well. I have the liquid momentum focus list right here. For those of you that follow this list, obviously I just dump them all into a quote sheet here, and I tend to just go out throughout the day. I like to arrange them based upon their price change, And this is basically, like I said, my go-to focus list that I will just sit here and scroll through the names repeatedly. CRM, Salesforce, a name that we're also swing long for a couple of weeks now, making nice new highs, up $3 today. MasterCard, really strong price action, and MasterCard and Visa is also up about $1.80 today. So interesting price action going on there. They look like they want to get above these June highs. Looks like MasterCard's already doing it. Visa's already doing it. Again, you could probably see there's a theme here amongst certain internet and software names acting strong, maybe some credit card companies acting strong. And you can always go a little deeper from here. You see Visa, MasterCard. Why not take a look at Capital One? It's not doing so hot. Let's take a look at American Express. It's holding its ground right above that $100 mark. Discover Financial, down 18 cents. So again, these are leading names in the market, so you're going to want to be focusing more on the bullish price action that's just basically inherent in the nature of their strong performance. And I think that was about it. There's plenty of names to go through here. I think I've talked enough for about 20 minutes. Hopefully I gave everyone a good sense of how to utilize this focus list, how I like to look at it, and the reason why I generate most of my trades from this area. I can go into more depth when the market's slow, throughout certain days in this summertime here. It's real simple for me to just go through, and I can go into maybe more of some day trading patterns I like to look at. The way is to analyze a 60-minute chart, a 30-minute time frame, and etc., and maybe even the weekly time frame if you're more swing trading, position trading oriented. So hopefully you got a little bit something out of that. I'm going to wrap things up here, and I'm going to let Gavin jump in about 2 minutes or so with his take on the next 18 hours. And actually, he's giving me a signal right now that he's good to go. I thought you were too busy watching the soccer game going on.
It's an exciting one. It's an exciting one.
I thought you were going to wait till it's over.
I'm able to multitask here, so we'll be over at the bell, right? So,
yeah.
And we are taping this, so anybody who is watching it and paying half attention to what Scott had to say, and he had a lot of good information there, we will be posting this tape here. So, no worries there if you are caught up in the action. But I'm going to go through the micro here then, Scott, and then we'll pull you back on and we can talk about Delta.
Cool.
So, taking a look around the markets, again, not a lot is expected. Of course, you never know when you're going to get that $200 billion tariff headline like we did last night. So, we remain in a dearth of information, and headlines can continue to dominate as we saw. So always on the heels for there, but taking a look at what's on the calendar, it should remain a little bit of a quiet day. We are getting closer to earnings season finally. I think everybody's looking forward to getting a little bit of volatility back. As Scott has mentioned on a number of occasions, we're simply in the summer doldrums, and you don't want to get caught up over trading in that environment. But we will have about 3-4 week time frame of earnings reports before we hit that late August lull where pretty much all of Europe closes down, and the U.S. a lot of vacation time taken before the kids go back to school. So with that in mind, taking a look at the next 18 hours or so, we're going to start off with the U.S. macro, and the big report's going to be the CPI numbers. We already saw the PPI figures come in a little bit hotter than expected, which it was certainly notable. I think inflation had kind of fallen off the radars following average hourly earnings and all that, and this PPI number kind of jumped it back in onto a few people's radars. And with that in mind, too, just want to note that Dallas Fed President Harker is going to be speaking tomorrow, and he is not a voter, but he's basically been more in the 3 rate hike camp rather than the 4 rate hike camp, but he has been keeping a close eye on inflation. So if you're curious to see how inflation numbers might be impacting the sentiment over at the Fed, this could be a pretty helpful read for us tomorrow with the action. So at the same time as the CPI numbers come out, which is 8:30 a.m., we will be getting the claims data. This has been a non-event for really even probably the last 2 years really at this point, and I expect that to continue. We will get natural gas 2 hours after that at 10:30 a.m. And then we will be looking at a 30-year bond auction where the Fed will be putting out $14 billion in paper for sale, and that will be followed up by the Treasury balance. So overall, nothing too major. That CPI number is certainly the belle of the ball on that front. So we'll want to keep a close eye out there. Moving over to the international side. Tonight, we keeping with the inflation theme, we got the Australia inflation expectations and what's otherwise a pretty quiet session on the calendar for the Asia-Pacific region. As a heads up, we are awaiting a money supply and new yuan loans from China, but we have not gotten a specific date on that. So that's a headline that could come out. The yuan loan number, if you're curious, is expected to come in at about 1.5 trillion. So that, we'll keep an eye out for that. But again, it's not. It has not been verified, the date on that release yet. But moving back to the inflation front, Germany and France have their final CPI numbers. These are final numbers, they're revisions, so not as much of an impact as the U.S. figure. And tomorrow morning at about 4:30 a.m., the Bank of England's going to be releasing its latest credit conditions. Shortly after that, we'll get the Eurozone industrial production number. Now, we had a strong German figure. However, France, Italy, and Spain from earlier in the week were pretty disappointing. So the overall figure could come in a little bit light at this point, and we'll want to continue to follow that. And one item of interest that will help us is shortly after the ECB minutes are due out, and this is of course from the last meeting where Mario Draghi had discussed that September 2019 timeframe, but there's been some questions about that, so these minutes should help provide a little bit more color, and they will be followed up by Eurogroup meetings, some probably follow-up commentary to the NATO comments, and of course tariffs will be front and center from those headlines. So there is where your potential headline risk lies overnight. Moving into the North American side of things, we got Canada and their housing prices due out at 8:30 a.m. Probably will be overshadowed by the CPI numbers. And then shortly after that, we'll get Mexico's industrial production number as we see the leadership change hand there. We're going to keep a close eye on how the economy is performing and seeing if these NAFTA headlines are having a very negative impact on the economy in Mexico. And that's what we're looking at on the macro front. As you can see, relatively quiet. Certainly inflation will be front and center, and then we'll also be taking a look at those ECB minutes for any further commentary and help in the direction there. On the earnings front, easily the biggest earnings is going to be Delta, and we're going to bring Scott back in to discuss this.
Yeah, I'm here, Gav.
What's up, Scott? So with Delta, some of the secret has been taken out there. They did pre-announce, they raised their revenue unit guidance, but they also raised their CASM guidance, which is basically their cost per mile, that metric that they do. And a lot of that, of course, is being driven by this rise in jet fuel. Now, we saw American Airlines come out with their own guidance, which was pretty poor because they actually had lowered their revenue per unit guidance, which suggests they're not having the pricing power as much as Delta is having at the moment. But again, with them too, their CASM was on the rise. Now, the airline sector has certainly been weaker as of late. Scott, I don't know if you're able to pull up the Fly ETF just to kind of give people an idea of where we've been going, and that has been able to hold above the 200-day ETF here at the 200-day moving average, but Delta, on the other hand, they've slipped below it. They slipped below it about a week and a half ago, and we've seen the stock roll down to that 48.50, 49 area, where it is fighting to hold support. Now, again, a lot of this earnings report's been priced in because of the pre-announcement. They've already provided some information there, so we're probably looking at a little bit more on the forward outlook side, where they expect jet fuel prices to go. One side item for that is to talk about tankers having to move towards a more economically sound engines in 2019, which is going to push them towards using more jet fuel. So be curious to see if that's really pressuring prices on that front. But the key is going to be how much these airlines are able to manage costs and if they're able to pass on the prices to the shareholders. And from there, we'll probably get a little bit of a general direction. But from the technical side, Scott, what are you looking at with Delta?
Yeah, on the screen here, I just posted the preview too. Did you write this up, or one of our other analysts?
I believe Craig Rapisardo, who's of course trend tracker and always does a fantastic job at the previews that he covers. So, you know, you can kind of lay out. That's what I was using as my roadmap for this discussion right here.
Cool.
So I'd highly recommend a review of that comment for some further color and a little bit more in depth in some of the numbers that we should be looking at. But from the tech side, Scott, what are you looking at on that front?
Yeah, so pretty much like you said, this is an underperformer year to date, sitting along its February lows here, right around that, what did we say, the $48 area. Just recently had a retest of that a week ago with the breakdown in late June from this multi-month consolidation pattern. It's below the 200-day, below the 50-day. I mean, things do not look good from a technical standpoint. Potential topping pattern going on here the last few months, so it's basically critical that the stock holds on to this $48 area. Otherwise, you could be looking at a potential drop down to it looks like last year's lows right around that $45 to $43 area.
Yeah, I mean, just in a quick aside from that, I mean, if depending on the strength of the report, I would kind of love to see that because I'd be a buyer at that level. It's been I've had a lot of success with Delta buying it right around 44. You know, I know you don't want to always go back to the well, but I just wanted to put that on people's radar that if we do see that breakthrough, now I want to see what kind of commentary is associated with such a move, but you know, I'd be looking at that as a potential buy down there.
Yeah, look at this. I just switched to a monthly time frame here, and you can just see that the stock is basically, over the years, just been grinding. Pretty much every time it dipped below $40, it was bought back up, but it seems to struggle every time it gets back above 50. So it's got a really kind of a loose, choppy range going on, but there are buyers, you know, below $40 every time price does correct, but there are sellers into the advance as well. And obviously, I could pull up a chart of the gasoline ETF. That's UGA, and obviously, gasoline prices are going to be a major influence on earnings reports from airlines. And you can see that despite today's little bit of a sell-off in crude and the energy and the gasoline space, it's been pretty much holding its own. And obviously, rising prices are going to have a bigger effect on that entire transportation sector. And here's a chart of the JETS, J-E-T-S ETF, which also looks like it's kind of topping out and rolling around. Yeah, we'll see what happens. I would say, you know, from the technical perspective, the path of least resistance is to the downside. So earnings are really going to have to surprise and impress people to kind of reverse the current bearish looking patterns.
And that's kind of the problem, I think, is the fact that, you know, we already had the pre-announcement, so I don't know how much surprise we're going to get.
Yeah.
And then we're going to be basing it around guidance. And I kind of discussed this with Air and WD-40, where they both had good quarters, but they were very conservative on their guidance, and these companies have to be. I mean, there's so much uncertainty laying around trade that I don't think anyone really wants to stick their neck out, and especially when you got Delta, that's a pretty big international flyer. I don't know what their percentage of revenue is on the international side, but they definitely have one of the bigger exposures there on that front. So, I think it's going to be a lot of heavy lifting for Delta to get up tomorrow. And I just don't see that happening. That's why I'd be a little bit more curious on a buy the dip. But we'll have to see how things play out, of course.
Yeah, exactly. So, all right. Anything else on the earnings front?
That's about it on the earnings front. Are you going to include in the market wrap here, Scott? Or
Nah, I think we're good. Market's
all right.
Putting me to sleep, to tell you the truth.
Yeah. It's been a quiet one, that's for sure. Outside of a little bit of blip of excitement around tariff headlines, not a lot there. So I think everybody's off watching the World Cup game at this point.
Yeah.
But we will be posting the audio for this, so if anybody's interested, we should have this up on the page shortly.
All right, cool.
All right, Scott. I'll talk to you later.